We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. The issue of the protection gap has long been a concern for insurers, reinsurers and brokers. And this year at the Rendez-Vous de Septembre, the issue's taken on a particular resonance.
The headwinds that we're seeing is the protection gap potentially widening. It's a topic of concern. It's not a new topic. It's a topic of concern for a long while already. It's affecting individuals, society, and economies, as we all know. Given the time of heightened uncertainty and changes as we've experienced them over the past years, we have asked these questions. Well, are some of those previously insured risks becoming less insurable? What's happening with those emerging risks?
Global protection gaps, $1.8 trillion. That's a record high. We are seeing still an imbalances of supply and demand, but with the profitability of the new business, there's probably hasn't been a time like now over the last 10 to 15 years, which is as good as now for the industry to cope with the challenges.
It may look like protection of old ties, but to my opinion, ILS is one of the primary instruments which could allow closure of the protection gap. And that is because insurance penetration in other parts of the world than United States and Western Europe is minimal, close to nothing.
You have protection gaps in the well-developed countries, even there in California or Florida, where there are still people not having sufficient coverage. Definitely, if they would all buy more coverage, ILS is the perfect place to take it because these are peak zones and the reinsurance industry can't absorb this all. So that protection gap fits best to the ILS market. However, if you think in the world, there are so many people without coverage, but this will be a long-term matter until more people get insurance coverage, which will then go to the reinsurance industry, but also to ILS. Talking a bit more about lines of business, I think cyber will become an interesting line for the investors community, but slowly over time.
We've just had an earthquake in Morocco, which in the grand scheme of things in insurance is not material really, but obviously from a human standpoint most certainly is, and we had the same situation in Turkey.
So, I mean, to talk about those two recent losses that we've seen, where you say they're materially not material for the insurance industry, but that speaks to a bit of an insurance protection gap, it does. What's there more that the industry can do to perhaps fill that gap?
I don't know whether it's an insurance gap rather than, the insured interest there is very limited. I think a lot of people are uninsured there, which, is not, it is an industry problem in a sense, but it's only because people aren't buying at the level you'd expect to buy in somewhere like North America. I think we respond pretty well to, as economies expand, we provide product to those economies. It's a question of whether there's any demand in the first place. There are all sorts of other things we can do around government solutions to situations like that, using parametric products for earthquake, for example.
That's the one thing that the reinsurance community, we're taking the tail of the risk curve for the world. And so we're used to handling these mega events. Now, things crop up beyond expectation, like the pandemic. That wasn't a risk that people didn't understand. They probably just didn't expect the magnitude of that. And we need to do better at that and prepare for that and work with governments and private capital to build partnerships to manage what is, quite frankly, an increasing risky world that we're living in.
Reinsurers and brokers have all got a role to play in finding a solution. For AM Best TV, I'm Richard Banks.